put up. Okay, let's see whether you guys have invested in ETFs or not. Okay, so you can answer yes, foreign ETFs only, or answer yes, local ETFs only, or both, foreign and local, or not yet. All right. So I believe those of you who said not yet, then maybe tonight is the chance for you to actually learn more about ETFs and decide for yourself to see if ETFs are suitable for you. So today, as I will be presenting to you about ETFs, I like the session to be interactive. So there is a chat function on Zoom where you can interact with me. But of course, if you have a question for me to answer, try and put it in the Q&A box, because in case if the chat gets, overloaded, I may miss some of the questions that you have, right? So I hope all of you are staying sane at home, as you know, we are still in this kind of lockdown and can't go anywhere, right? Now, what I'll do is I'm going to end the poll, okay, and share the results with all of you. Okay, so if you take a look at the results of the poll, 60% of you say you have not invested in ETFs. Wow, that is quite a big number. Some of you here, oh, in fact, 19% say you invest only in local ETFs, and then foreign ETFs, 13%. I actually expected the other way around, okay? But it's good. Good to get a feel as to whether you guys understand ETFs or not, you know ETFs or not, or have invested in ETFs or not, to help me pace my presentation, okay? So typically, you know, I'm a woman, so I don't know whether this joke I say before or not, whether you heard it before. Essentially, you know, whenever you talk to a woman, very naggy one, very chong hey one, so I'm afraid that I might actually overrun my time, and I'm allocated 1 hour, including Q&A. So in case I suddenly, you know, I start talking very fast because I'm like chasing a bullet train or anything, right? Then please stop me, tell me in the chat that, you know, hey, Lee Choo, you're going too fast. Can you please slow down? Okay. Now, as you know, as I talk about things, you can also share your opinion and whatnot in the chat with everybody else. Okay. So let's start without further ado. Disclaimer, right? Given that we're in the financial institution, we cannot run away with disclaimer. So tonight's session and presentation deck is presented and prepared by Affin Hwang Asset Management. And this is in no way a recommendation for you to buy and sell. It's not a buy and sell call. And in the event, if you are interested in any of the products that I mentioned tonight, please go to our website, www.tradeplus.com.my, to get a copy of the prospectus. Read it, okay? Especially if you cannot sleep, read it. And then the next morning only you decide whether to buy or not, okay? Don't read the prospectus and then straight away jump into buy because I share, okay? Now, so I'll, as you know, when you register for this webinar, I'm going to split tonight's session into 3 sections, okay? So the first part of it will be to talk to you or to explain to you everything that you need to know about ETFs as an investor, okay? So let's start with the basics. What is an ETF? So I'm sure all of you, given that you are FSM1's client, you would be very, very familiar with unit trust funds. So I don't think I need to explain much about unit trust funds. And on the other hand, you have stock trading, stocks where, you know, FSM1 also has recently launched their stock trading platform. And ETFs, at the end of the day, is actually a hybrid product, you know, a child of unit trust funds and stocks or shares. Why is it so? Because ETFs inherits features from both unit trust funds as well as shares. So ETFs actually at the end of the day is set up as a fund, all right? It's the same as a unit trust fund, but the only difference is it is listed on the stock exchange like a share, so that you can then purchase the shares and sell the ETF just like any ordinary shares. So ETFs, typically, we call them index trackers. But this is not true, yeah, because there are some, not 100% true, because there are some unit trust funds which are index trackers as well, all right? But ETFs, generally, when we talk about ETFs, they are index trackers. But I'm sure all of you here know Katie Woods and know of the ARK ETFs, which is very famous in the US, and those type of ETFs are actively managed. So those are not index trackers. But generally, okay, maybe about close to 80–90% of the ETFs that are available in the world are generally index trackers. So what do we mean by index trackers? Index trackers simply means that this particular fund which has been set up aims to track the performance of a particular index. So we all measure the performance of a broad-based market using indices, right? So for example, you have S&P 500, you have KLCI, you have Hang Seng Index, etc., etc. And so in the past, we can only use these indices as benchmark. So that's why the fund managers in the US then created ETFs to mirror the performance or to mirror the underlying of the particular index, so that you can now invest into the index. All right. So ETFs are created to track the performance of an index, while on the other hand, just like you all know, unit trust funds aims to outperform a benchmark or an index. So if you look at the performance of an ETF versus the performance of a unit trust fund, the fact sheets deviate or look different. ETFs will just follow the index, right? The performance, while unit trust funds tend to, what would you be looking for? You want to look for a chart that looks like this, right? Without performance, because you don't want to be tracking the index. You pay the fund manager higher fees so that they can outperform the index for you. So what are some of the differences between ETFs and unit trust funds, which I believe some of you generally would know, which is the main difference is actually, of course, fees. Okay, generally lower for ETFs, below 1%, and unit trust funds is somewhere between 1 to 2%, depending on the fund that you buy. Other than that, the trading method is also different, or the purchase method is different. For a unit trust fund, you either go through a unit trust agent, a consultant, or you can go to FSM1's platform to purchase a unit trust fund. So you go through a person, and then you sign a form or submit it online digitally. Whereas for ETFs, they are traded on the stock exchange. So you don't go through a salesperson or a unit trust agent, you go through the trading platform. All right. So this is actually the main difference between unit trust and ETFs. But personally, one thing that I really like about ETFs versus rather than the unit trust funds is the fact that I can trade it intraday and I know the price that I'm going to exit. Because we all know that unit trust funds are calculated, their NAV, net asset value of the fund, is calculated at the end of the day, and it's one time only. So which means by the time you submit the order to buy or to sell, you don't know what the price is. You need to wait for the fund manager to calculate the price at the end of the day. But personally, I like the fact that whenever I buy and sell into an ETF, I know exactly what is the price that I'm buying and what is the price that I'm exiting. Because if I want to take profit, I know exactly what percentage of returns that I get if I exit at this price. Whereas for a unit trust fund, it is quite difficult to gauge because you need to wait for the end of day pricing. Okay. Of course, charges are also different. Sales charge and the trading brokerage charges that you pay is different. Okay. So one thing that I want to highlight tonight is the fact that as an investor of an ETF, especially in Malaysia, don't just go to the trading platform, see whatever price there is, and then you just click buy. Why? Because you need to make sure that you buy at a fair value. Okay, so we know that NAV is calculated once a day, but there is also an intraday NAV called the IOPV, Indicative Optimized Portfolio Value, which essentially just means intraday NAV. So the portfolio is given to a third party, and they will calculate the price, okay, the NAV of the fund every 15 minutes. And that price will be published in Bursa Marketplace website. Okay, so I've given you the link to Bursa Marketplace website where you can actually take a look at that page and look at the IOPV before you buy and sell. Why? Because you don't want to be buying at a premium, and you don't want to be buying, of course, you want to be buying at a discount, right? But you don't want to be selling at a discount. So you want a fair value. So that's why it is important to make reference to the IOPV before you buy and sell the particular ETF. So personally, for me, I will look at the IOPV when I buy. But when I sell, right, sometimes, I don't really care whether it's at IOPV or not, because I have my own, target price that I want to sell it to achieve a certain percentage of return. So what I'll do is when I buy, I don't queue the buy price. But when I sell, I typically, after I buy, then I will put in my the good till date sell price so that I can then make the sale of that particular ETF. Okay. Now, so this particular page by Bursa Malaysia lists down all the ETFs in Malaysia and gives you the IOPV of every ETF, not just Affin Hwang's ETF, not just Trade Plus ETF, it's every ETF on Bursa Malaysia. So make reference to this before you buy and sell the ETF on FSM1's trading platform. Now, the other question that I actually want to ask, is this, okay? Are ETFs liquid? Maybe I need to hide this slide first. Okay, now I have a couple of polls, not a lot. I have about 4 questions that I slot in between the presentation so that it becomes a little bit more interactive. So I want to know if you guys think that ETFs, are they liquid or not? Okay, are ETFs liquid? Okay, yes, no, I don't know. All right, let's see what you guys have answered. So 70% said yes, 13% said no, and some say I don't know. Wow, you know what? I don't know why your answers are a bit different from the investors base that I typically do ETFs with, because whenever I speak to clients of other brokers, they will tell me that ETFs in Malaysia is illiquid. Okay, and simply because they refer to the trading volume as an indication of liquidity. But for ETFs, because of the fact that we appoint market makers to provide liquidity to investors, they play dual role, right? Their role is to be the buyer and the seller at the same time. So at any point in time, they will be quoting a buy price and a sell price, so that investors who want to buy can take their sell price, and investor who wants to sell can actually sell back to them at the buy price. And other than that, they also play another important role, which is to normalize the price of the ETF to its fair value. In other words, they will quote the price to be sold and bought back from investors at the intraday NAV that is calculated by their algorithm. Okay, so we feed them the price of the portfolio. They know what we have in our portfolio because ETFs are transparent. And from there, they have an algorithm to keep calculating and refreshing the price of the ETF and then quote the price on the stock exchange. So why is it that, sometimes people say that ETFs are illiquid, etc., etc., is because they look at a different matrix, which is the trading volume. But in actual fact, what you as an investor should take note is the quantity that we queue to sell and buy. Because if you look at the share and say that, this share, I cannot get out, those are when, there isn't even a buy price for you to exit. But for ETFs, because we have market makers out there, definitely there is that particular price for you to buy and sell. Now, market making hours for Trade Plus ETFs. So unfortunately, our market makers don't market make from 9 to 5, right? Because there are instances where, for example, the S&P New China Tracker, the underlying stocks of this portfolio is actually Hong Kong listed shares, excuse me, and also US listed shares. So when you have shares from these two countries, what happens is that they cannot calculate the price of that particular ETF if the markets are closed, right? So what they do is they have to wait for Hong Kong market to be open at 9:30. So which is why our market makers will only start quoting the prices from 9:30 a.m. So try to avoid buying the ETFs between 9 to 9:30 because the market has not opened. Most likely you won't be buying at a fair price, right? So try as much as you can to trade with our market makers because there is that assurance that the price will be fair rather than trading amongst retail investors. Okay. Now, so how do you know whether this pricing is market makers or not? Typically, all our ETFs, our market makers will quote 1,000 lot on both sides, with the exception of the FANG 1XI and FANG 2XL. Our market makers quote 300 lot on each side. Okay. Now, a lot of you, talk about trading volume, and say that, ETFs are not liquid, how to buy and sell, and this trading volume is a chicken and egg situation really, because if there is, if everybody is just sitting, waiting for transactions to happen on the exchange, I can tell you nothing will happen because everybody is, I'm waiting for you, you are waiting for me. Okay, so which is why, managers like us will step in to play a role to do marketing, to educate investors so that all of you are aware of the existence of market makers, because that gives you the assurance that you can actually buy and sell at the fair price and as and when you want to buy and sell. Important factors to review while selecting an ETF. Okay, let me pull up another poll to ask you guys this question. Which do you think is the most important selection criteria to be used when selecting an ETF? Which of these do you think is the most important? Okay, one can choose one. Huh? Let's see what you guys are answering. Which is the most important selection criteria to be used when selecting ETFs? Okay, some say all of the above, some says the index that it tracks, some says total expense ratio and liquidity. Okay, let me share the results with all of you. So it looks like there is like a tie between index that the ETF tracks versus all of the above, more or less the same, 30%. And some say total expense ratio and liquidity. Wow, I think you guys are really fantastic, man. This bunch of crowd. I think I don't even have to, talk much because you already know what I want to talk, what I want to elaborate. For me personally, I thought that a lot of investors would pick total expense ratio because a lot of people out there, when we talk about ETFs, we talk about fees, right? So to me, as an investor, I not to say I don't care about the total expense ratio, but that factor is not the most important factor to me because there are a lot of other factors which are more important. Say, for example, so what if you invest into a very cheap ETF, but it doesn't give you the exposure that you want, or the index, or the way they construct the index is not as good as another ETF, which is where the index is being constructed in a different way and has got a higher potential to make higher returns, but the fees could be a little bit higher. So to me, I don't think the expense ratio should be the most important thing, but it should be, of course, a blend of different factors. So if we take a look at total expense ratio. To me, total expense ratio should be compared when the two ETFs actually uses or track the same index. For example, in the US, you have Vanguard, VOO, which is the S&P 500 ETF by Vanguard. And then you also have iShares S&P 500, and there is State Street SPDR S&P 500. But which one do you choose? So you then, if those three particular fund gives you the exposure to the same underlying index, that's when expense ratio become more important. But you cannot take an orange and compare with an apple. Say you compare China and S&P 500, right? And then you say, oh, this one expense ratio cheaper, so you buy that particular ETF because it's cheaper. To me, I don't think it should work that way, right? Okay. Second thing is the AUM and fund size. Some people or some research out there will say that, hey, take a look at the fund size. Yes, fund size is important, but everybody starts from zero, right? Everybody starts from somewhere. So what is important when you select an ETF, especially if the fund size is small, because at the end of the day, when the fund size is small, you are only worried about one thing, which is the fund may be closed down or terminated. But then again, even if the fund is terminated, there shouldn't be much of a worry, because you as an investor will get back the NAV of the fund when the fund is terminated. So to me, when you select, if fund size is a concern to you, then you need to, or rather fund closure is a factor or of importance to you, then you should be looking for active issuers who are constantly doing marketing, so that you know that they are responsible issuer, and therefore it minimizes the risk of the fund being terminated. All right. Now, other than that, of course, liquidity. Liquidity is also another factor where investors will look into whether or not they want to invest into an ETF. But liquidity, again, you need to understand that the fact that there are market makers out there, so don't just use trading volume as a gauge to liquidity. Okay, currency. Okay, this is often a component or a factor which is being overlooked by many investors. Why? Now, let me give you an example. Today, you can invest into a US listed ETF that tracks, let's say, China. Okay, but what do you have to do if you want to invest in US ETF? You have to convert your ringgit to US dollar, and then you buy that particular ETF in the US. So a lot of investors don't take a look at what is the currency, the FX spread that is being charged. Of course, those are transparent costs, because you technically, it's not like a fees 1% or 2% or even 3%. So those are costs that a lot of many investors overlook. Okay, because it is not a line on its own that says currency fees, right? It's not. So those spreads should also be taken into account whenever you purchase an investment outside where you need to convert your currency. Underlying index to me is important because it gives me the exposure. It tells me whether or not the exposure that I'm looking for is provided by the underlying index. So that to me is a very important factor. Now, tracking difference, of course, shows you how well the fund tracks the index. So if you ask me, I think tracking difference should actually be of higher importance as compared to fees, because sometimes there could be instances where even though fees are more expensive, the fund manager actually tracks the index even closer. So those are, so tracking difference should be something that you should look at. Now, last but not least, transaction costs. What is the cost if you were to buy a foreign listed ETFs versus a locally listed ETFs? Because today, if you go to a lot of brokers, in Malaysia, the fees to transact foreign ETFs are higher. Okay, but you all don't go and tell me I got Tiger Broker, eToro, and all these platform which maybe has zero fees. The reason is because if you were to compare, number one, these platforms are not regulated by Securities Commission Malaysia, which we will actually strongly discourage investors from going to those platforms because there could be risks. I'm not saying that they are, not regulated by other regulators. They are, but they are not regulated by the Securities Commission Malaysia, and therefore there could be a risk. Now, I'm sure all of you here, okay, would tell me that US ETFs are cheaper, right? Returns definitely will be better. So if you take a look, okay, I'm going to compare two ETFs of Affin Hwang, which is from Trade Plus. The first one is Trade Plus Sharia Gold Tracker 0828EA, which is listed on Bursa Malaysia. If you look at our AUM, we are at close to 60 million ringgit. Very small as compared to the Spider Gold Trust SPDR Gold Shares, which is GLD, which is listed in the US, and they are at 57 billion US dollar. And if you look at the TER, which is the total expense ratio, we are close to double of their fees, 0.4 and 0.7. I'm not gonna, try and hide or not admit that our TR is worse off than the global boys simply because they have the scale. I'm going to tell you upfront that yes, the TR of Malaysian ETFs is definitely worse off. Okay, but later on I will show you the performance chart. Okay, and the second ETF that I want to talk about is the Trade Plus S&P New China Tracker, where our AUM again is lower. TER is at again double of what you can find that is listed in the US iShares MSCI China ETF. Now, let's take a look at a few slides. So this is the performance of GLD, the largest gold ETF in the world, versus the 0828 EA, which is our gold ETF. Now, of course, our gold ETF has got a shorter track record because we only listed this in December 2017. And if you take a look at the performance, since 2017, since inception of the fund, the performance of the GLD versus the gold ETF is not too far off, actually. So what it means is that, number one, we are comparing different currency, because GLD, remember, if you were to buy GLD, you need to convert your ringgit to US dollar, right? And then by the time, say, you realize, say, 40% gain in the US, you also don't know how much currency gain or loss that you get. Then you have to manually calculate, oh, how much I make from currency. But if you invest into the locally listed ETF, which is the gold ETF, everything is already in ringgit for you. And it gives you the convenience because you don't have to trade in a sometimes you have to open a different account to trade and track your investments. Everything can actually be consolidated. So in other words, even though AUM is lower, the TER of the fund is higher, there could be currency element or currency gain loss that you actually get or take from investing in a locally listed ETF. The second ETF that I want to, comparison that I want to put up is the performance of the iShares MSCI China, which is listed in the US, denominated in US dollar, and our China ETF 0829EA. Now, if you take a look at the performance of these two, the China ETF MYR was listed in January 2019, and we are up about 22%, whereas the MCHI is up about 15% comparing within the same period. Now, this chart is to illustrate to you the difference of these two index. So again, what I'm trying to emphasize is the fact that cheap does not necessarily means good, okay? Because in this case, if you compare the MSCI China versus the China ETF, we track different indices, although it gives you exposure to China, but MSCI China tracks the broad-based China market, whereas the China ETF that we have tracks the new China economy sectors. So they are, again, different. Indices is different. The sector that we take is different. Okay, so that's why if you ask me, this is actually an apple and orange comparison. But what I'm trying to illustrate to you is that don't just look at fees, look at the TR, look at stuff like that. Underlying index plays an important role as well. So risk of investing in ETF, of course, I cannot just say good things about ETF. I need to talk about the risk when you invest into an ETF. So unlike unit trust funds, where typically the fund manager will manage your funds more actively, when there is a bear market or when market is in a correction, fund managers typically would raise their cash level to help protect your capital or investments. But in this case, because the ETFs are tracking the index, therefore, when the market is down, it will just come down on its own together with the index. So in this case, this is what we call a passive investment management risk, because we don't do anything to mitigate any potential loss that we foresee. Now, other than that, of course, there is tracking error risk, because as much as the fund manager tries our very best to track the index, there is the risk that we may not be able to track it closely. Okay. Other than that, there are also things like the units can trade at a premium, or discount other than the NAV, suspension of creation and redemption, and trading in units on Bursa may also be suspended or delisted. Okay. Now, I'm gonna answer questions at the end. So before I do that, let's do another poll. Okay, I'm gonna launch another poll. So I want to see if you all have been following the ETF market in Malaysia or not. Okay, so how many ETFs are there in the Malaysia market? Okay, let's see how many of you can get it right. Okay, how many ETFs are there in the Malaysia market? Five, 10, 20, 50. Okay, let me share your answers. So 41% says 10 ETFs, 48% says 20 ETF. Okay, and like I said, this FSM1 client really are all very pandai one, very educated, very sophisticated, because you guys really keep track of what's happening in the market. Now, the types of ETFs available on Bursa Malaysia, there are actually 20. Okay, 20 ETFs being listed. And here are the types of ETFs that are available. So despite, right, we only have 20 ETFs on Bursa Malaysia, but there is actually quite a wide range of underlying or exposure that you can get. Of course, at this juncture, there's still a lot of gap. Yeah, you can't get everything, meaning you can't really build a portfolio that has got everything, right? Unlike the US market, where the selection is a lot wider. They have like, I don't know, 6,000 or ETFs listed. So so even though there are only 20 ETFs, but it kind of also gives you sufficient exposure if you want to get. So, okay. So my guess is, okay, you guys are interested in these few sectors. And coincidentally, these are the funds where we manage. Just joking, guys. So what I'm going to highlight today, of course, there are a bunch of sectors or exposure that you can get, but I'm going to zoom in into these few sectors or these few exposure and share with you guys briefly what you can get out of these ETFs. Okay, we're going to talk about commodity. We're going to talk about Malaysia, REITs, and China. Now, the first ETF that I want to share today is the Gold ETF 0828EA. So this is our only Sharia compliant ETF listed on Bursa Malaysia. Okay, and it tracks the price of gold. So like as you can see earlier, just now I showed you the performance of GLD versus the gold ETF. This particular gold ETF actually is backed by physical gold, which means that we, Affin Hwang Asset Management, the fund manager, invest on your behalf into real physical gold that are LBMA approved. Okay, LBMA stands for London Bullion Market Association, right? So we just don't buy one gold coin or gold bars to keep for the fund, but we buy those that are produced by LBMA approved refineries. And at the same time, because it is physically backed, we appoint Standard Chartered Bank Singapore as our custodian. So we store our physical gold in Singapore, and in order to make this fund Sharia compliant, we also allow physical gold redemption. But of course, physical gold redemption, if you have 100 units, you cannot come and redeem now. You need to own at least 500,000 units worth of the gold ETF before you can redeem the physical gold. And if you are really interested in redeeming the physical gold, which is roughly about 5 gold bars, you need to take a plane or drive down to Singapore to Standard Chartered and collect your physical gold from the vault. You're on your own. All right. So this product, gives you exposure to gold price, but you don't have to worry about logistic and insurance. And also, the gold that is that we store in with the custodian is also insured. So in the event got people bomb the vault and try and churi the vault, the gold, the insurance company will actually compensate the fund. All right. So from a security perspective, it's there. Now the next, oh dear. Okay, so this is to show you the return of the fund versus its benchmark. We track the LBMA gold price AM, and as you can see, the tracking is more or less there. Okay, now the second ETF, which is the China ETF. So this particular ETF tracks or gives you exposure to the new China sectors. Okay, now new China sectors are your non-conventional sectors, so no banking, no manufacturing, because the new China economy is all about consumption, is all about the Chinese citizens getting richer and richer, and therefore they have higher spending power and will consume more. So it's all about consumption. It's all about technology. It's all about their focus in healthcare and clean energy and stuff like that. So that's why this particular ETF is different from the broad-based ETF like your MSCI China, because MSCI China, they probably just take the market cap weighted largest cap stocks, and then you will end up with quite a heavy weightage in banks. So this particular ETF doesn't have banks. So this gives you exposure to the new China economy. Okay, and we actually listed it in dual currency, so you can either trade it in ringgit or US dollar. So if you take a look at the performance of this chart, also the tracking is more or less has been is there around there, and we have made our very first income distribution last year, end of last year. It's Hong Kong dollar 38 cents but of course we don't pay in Hong Kong dollar. We actually convert it to ringgit, and I think the ringgit equivalent was 20 cents. Okay, so last year we paid out 20 cents dividend for this particular ETF. So dividends from ETFs are paid to you in cash. So it is credited to your account instead of, like unit trust, we reinvest. So in ETFs, it's always cash distribution. Now, the other ETF that I want to share with you guys is the Malaysia Momentum ETF. So this particular ETF is called a Smart Beta ETF. What it does is that it will pick the top 20 stocks which has high momentum, and how does the index provider, which is NASDAQ in this case, selects or deem the stock as high momentum is by using point and figure charting. So when you talk about momentum, right, some of the investors will think that, hey, is it gonna pick stocks which are very illiquid or very speculative? The answer is no, because when the fund when the index, which is NASDAQ, selects the stocks, these 20 stocks, it picks the top 100 large cap stocks, and then from there they stack it across the FMKLCI, which is the general index, and see which particular large cap stocks has got high momentum. And of course, typically we expect momentum to continue, and it's also long-term momentum. So this particular ETF is suitable for investors who wants who thinks that technical analysis is something that you can use in selecting stocks, but you don't know how to do it yourself. And it also gives you a slightly different strategy as compared to the general unit trust with Malaysia underlying in there, because it uses a different way of selecting stocks, right? So this particular ETF, of course, the track record in the past has been really decent, and that's why we actually worked with Nasdaq for it. But of course, if you talk about the performance over the shorter term, it has been lackluster because the momentum of Malaysian, our KLCI also is coming off lah. So what as you can see, this particular ETF is a little bit more volatile as compared to some of the other funds or ETF that you can find in Malaysia. Now, the last ETF that I want to share today is on AXJ REITs ETF. This particular ETF gives you exposure to Asia ex-Japan REITs market. So it only invests into REITs, and it aims to pay you quarterly dividend. And typically the portfolio or the underlying securities is selected based on dividend yield. This is also one of our smart beta ETF where we use dividend yield as a factor. So which means that MSCI, which is the index provider for this particular ETF, actually will screen through all the REITs that are available in the Asia ex-Japan market and picks those with the highest yielding dividend. And then, of course, they will also do some elimination because if, let's say, this particular REITs is not sustainable, meaning last year they never pay dividend, suddenly this year they pay a lot of dividend, then those kind of REITs are excluded. So there is some persistence or sustainability screening that happens for this particular index. And it currently gives you a yield of about 5.4%. All right. And it gives you diversification. But typically, when we talk about high yielding REITs, they are Singapore REITs. So I think 70% of the entire portfolio is Sing REITs. So again, all these ETFs gives you exposure to the foreign market, and you don't really have to leave Bursa Malaysia in order to get those exposure. Okay. Now, if you take a look at the performance chart, the yield, the recent income distribution that we have paid out was in July, and it was 1 cent. Okay, a yield of about close to 1% last quarter. All right. So the last section, okay, how ETFs can actually be a good foundation for your investment portfolio. Now, if you are a dividend lover in the first place, okay, because this is one of the very common questions that we get every time we talk about ETFs. Does ETF pay dividend? Not all, some. For example, gold ETF, gold doesn't yield you any dividend, so the fund cannot pay you dividend. But other than gold, the rest of the ETF typically will still pay you dividends, okay? So if you can take a look, this is actually the list of ETFs that pays you dividend. Mostly are yearly, but quarterly will be our Trade Plus MSCI Asia ex-Japan REITs, and semi-annually it's the FTSE Bursa Malaysia by an ABF Malaysia bond index, right? Now, why do you choose ETFs as your foundation? Because number one is convenient. Of course, unit trust gives you a similar convenience as well, because you just buy one fund, you get a diversification instantly. Now, second thing is, of course, if you were to compare it with unit trust, cost of purchasing the ETF or holding the ETF typically is lower. And thirdly is about access, because even though there are a couple of hundreds ETF unit trusts available in Malaysia, but in terms of access, it does not give you all the access that you need. For example, there is no leverage and invest. Gold, there are some gold unit trust funds, but I'll stop there. Okay, you do your own comparison. I don't want to elaborate further. Now, why should you then consider investing with Trade Plus ETFs? Because Trade Plus ETFs is actually the most actively traded ETFs in Malaysia. So if we were to compare all our Trade Plus ETFs trading value versus the entire ETF market in Malaysia, as you can see, it grows with the number of ETFs that we have. Come 2019, we have been the lead in terms of trading value. Our ETFs are traded, at least 70% of the total market volume. Now, of course, other than that, 40% of the total ETFs listed on Bursa Malaysia is managed by Affin Hwang Asset Management. Okay, now I think I'm going to stop here to take a Q&A before I jump into a few last slides. Okay, let me take some of the questions first from Gary. Hi, Lee Choo, can you answer this? What's the advantage of investing in a local ETF versus an overseas ETF? Example, New China S&P ETF from Affin Hwang versus similar foreign ones tracking the same New China S&P index. Okay. The New China index by S&P that Affin Hwang's ETF tracks is customized for us. It excludes A shares. The comparable ETF is actually, I think, by CSOP, listed in Hong Kong. They are of a similar sector, which is New China, but for theirs is including A shares. So at the end of the day, I guess you have to look at a few things, right? First of all, is the CSOP ETF index or the underlying index is something that attracts you better because it includes A shares. Ours doesn't. We remove it because of the higher volatility, right? Then the second thing that you need to consider is transaction costs, and compare the performance of these two particular ETF or indices. Other than that, I don't think in the US there are many. Even if there are, again, you can actually use the same strategy to compare those indices. Okay. And I hope in the previous slide, I have actually addressed some of these questions as well. So question number two from ACES, does an index ETF has underlying assets? If yes, what kind of assets? Yes, index ETF or index ETF, which are index trackers, definitely have underlying assets. So we buy and mirror the weightage of the index. So if, let's say, this index has got 100 stocks, Affin Hwang will actually buy all the 100 stocks, all right, in order to mirror the performance for you. Okay, next question by Jade. China ETF from Trade Plus tracks which China index? It tracks the S&P New China Sectors X A Shares Index, right? A little bit longer. Okay, question, interesting info about IOPV. So what's the best way to use it to our advantage? Do we buy at the IOPV price? Yes, you should take a look at the IOPV price. If the IOPV price is, let's say, at $1, then if you want to buy, you should be buying close to $1. Okay, of course, if it's at a discount, it's better for you, right, as an investor. If it's at a discount, then I think maybe you should buy, right? But then again, it depends. Even though it can be at a discount, but you need to also see whether what if the index continue to come down. Then even though you buy at discount, does not necessarily make you money. Okay, so it's not so easy to arbitrage per se lah. So which means that IOPV price should always be your reference price whenever you want to buy and sell. Okay. Now, regarding market makers, are they appointed because local ETF is still at its infancy? Correct me if I'm wrong, but I don't think overseas ETF have market makers to buy, sell. In the future, will market makers be removed once our ETF environment is more vibrant? What happens then? Okay, a lot of questions regarding market makers. A very, very good question. Now, you may not know, but all the ETFs in the world have market makers. We all have to appoint market makers. So if you go to the website of Vanguard or whoever, you will see authorized participants and market makers list in there. So what happens is that market makers have to play a role to provide liquidity, but their role will slowly diminish when the market become more vibrant. Why? Because as you can see now, our market makers, like it or not, they need to make money, right? So they will quote a spread for the buy and sell. So if the market is vibrant enough, a lot of retail investors will come in to narrow the gap of this spread. So which is why when the market becomes more vibrant, it's actually good because the spread of those ETF will be narrowed. So in the event, if let's say suddenly all the retailers hilang or all the investors from the market hilang, then the market makers will still be there. So to answer your question, yes, market makers are is appointed and they still play a role even though the overseas market is vibrant. Okay. All right. Next question. Okay, when I try to invest in ETF in Bursa, I am not able to buy in units after trading few times. Why is it so? To be honest, I'm not sure which broker you are using, but it could be related to the problem of the broker. Okay. Of course, the other issue could also be what price are you queuing? Are you queuing at a particular price? And if in the event the IOPV or the intraday NAV doesn't hit your price, then of course the transaction cannot be done. No transaction will be done. So which is why for us, typically we encourage investors to look at the IOPV, and if the price quoted by in the market currently is fair, then you should just take the sell price that is available for you to buy. Okay. Okay, next question. Why can't we buy the leverage and inverse ETF from Hwang on FSM1? I think if I'm not wrong, this will be available soon. At this moment, I think it cannot it can't be done yet. Okay. So for that, you need to check with FSM. Now, one of the risks of ETF that I mentioned just now was trading may be delisted or suspended. What happens to the invested units then? Do I lose them or will I get back my investment as per the NAV? Okay. In the event, if let's say a particular fund has to be terminated, the fund manager doesn't have the right to terminate the fund immediately. So similar to a unit trust funds, we need to first call for a unit holders meeting. So when we call for unit holders, we will basically get votes from the unit holders. You have to say whether you agree or disagree to the closure of the fund. So if there is sufficient quorum to close or terminate the fund manager will proceed to sell down the underlying of or the assets of the fund and then return the NAV to investors. So you won't lose everything. Okay, it's the same as per unit trust fund. You won't lose anything. We will sell down the units or underlying assets and you will receive the NAV of the fund. Okay. Now, how often ETF in Malaysia declare dividend? You see, I can predict the questions that you guys asked already. That's why I already have that slide just now, right? On how often does Malaysia ETF in Malaysia declare dividend? Okay, how often ETF in Malaysia do rebalancing? Okay, rebalancing depends on the index. Some indices are rebalanced semi-annually, some indices are rebalanced quarterly. So if you're interested, let's say, for example, I'll give you our Trade Plus ETF's rebalancing schedule. New China is rebalanced semi-annually. Gold is never rebalanced because gold is gold, right? The Malaysian Momentum and REITs is rebalanced quarterly. Okay, so you have to refer to the prospectus of the ETF that you want to know to see whether they how frequent rebalancing happens. Now, I mentioned about the REITs tracker yield is about 5%. Then why the dividend yield is only about 1%? Oh, this dividend is for that quarter, 1% for that quarter. Okay. Okay, what other ETFs will Hwang introduce in the future? Any hints? I don't know how to give you hint if it's still in the works, but we are not launching any ETFs this year. We are looking at launching a few ETFs next year. Okay, hopefully in Q1. I cannot give you hint lah, but what you can do is you can PM us if you have any idea, or if you have an exposure that you want to get but you just can't get it, you know, anywhere. You can WhatsApp to us, and then we can definitely take those into consideration. Now, can you short sell? Not because in Malaysia you can only do RSS, restricted short selling. So in other words, you can't. But we do have inverse ETFs, which essentially is short selling. But we only have two underlying, which is HSCI and NYSE FANG Plus Index. Why ex Japan? Okay, this question I don't know how to answer, but generally, if you notice, a lot of the Asia funds in Malaysia, including unit trust, always exclude Japan. Okay, so that's why, I guess. Okay, no right or wrong lah. I guess it's just the tendency to exclude Japan is always there whenever we look at Asia. All right. Next question, how do you buy an ETF if you think that the underlying index will be going down? Oh, you all want to know about shorting. Okay, let me take a look and see. Okay, maybe I can explain briefly, all right, since we have a bit more time. Now, there are 6 leverage and inverse ETFs available on Bursa Malaysia. Like for example, we have Trade Plus NYSE FANG Plus Daily 2x leverage, 2 times leverage, which means that on a daily basis, the fund manager wants to give you 2 times the return. But the downside or the risk to the leverage ETF, daily leverage ETF, is the fact that if you hold the ETF for longer than a day, let's say you hold for 5 days, we compound the daily returns. Okay, so as a result of it, if you measure your, let's say, a week's return of the 2 times leverage versus the underlying index return for that week, you may not get exactly 2 times. Okay, of course, I have other slides, but I didn't prepare it for this presentation. I actually have another webinar coming up with FSM1 sometime next month, which we're going to zoom into that. Sorry, I don't know whether it's FSM1 or IFAS, but I have an upcoming webinar that talks about leverage and inverse. Inverse tracker, on the other hand, shorts the particular index. Okay, so there are 3 inverse ETF available. We have FANG Plus Daily Inverse, HSCI Daily Inverse, and KLCI Daily Inverse. So if you think that the index is coming down, you want to take opportunity to profit from the bear market or the correction, you should buy into the inverse tracker that or inverse ETF that gives you the short exposure that you're looking for, right? Now, next question, please confirm dividend payout by ETF will lower ETF NAV just like unit trust. Yes, you're right. Once we declare a dividend after the X date, the price of the ETF will drop. Okay. Are market makers speculators too? Okay, market makers are not speculators. Market makers are there to provide liquidity. So what do? They are the buyer and the seller at the same time. They typically will try not to take position. So they will do their own hedging. So for example, if they have a lot of inventory of the ETF, they will short something. They will do their hedging. They will short the indices. They will short futures to cover their long exposure. So they try to make money from the spread. They are not speculators. Okay. Okay, is there any Malaysia ETF fund that is tracking the S&P 500? The answer is yes and no lah. Okay, let me show you this particular slide. Okay. There is one that tracks the US market, which is my ETF Dow Jones US Titans 50. But the only problem with this ETF is it's traded in the US dollar. So if you have ringgit, you will need to convert, and then I'm not too sure whether FSM1 has got allow you to trade USD counters in Malaysia. Okay, so this is closer to S&P 500, and it's Sharia compliant. So it picks the largest 50 shares on the US market that is Sharia compliant. Okay, ex-Japan, because Japan is a developed nation. Yeah, typically it's because of that lah. And also when you look at the market cap, if you were to compare, maybe Japan's market cap will, take up quite a fair bit of that. Which ETF has the highest volume? So far for us, in the entire ETF, if we look at our own, if I look at Trade Plus ETF, China and Gold ETF typically has got the highest volume. Of course, I think China, like if you ask me, I think China wins per se. China typically has got higher volume, but gold is seasonal. I would say gold is seasonal. Okay. Okay. So that's all the questions that I have received, and I think thank you very much, all of you, for staying with us till the end. Last but not least, I just like to end with this particular slide, which is to inform you that we have tons of information on our website, which is tradeplus.com.my. Prospectus is all there. Please read your prospectus, do your research and homework. We have Facebook, our social media, Telegram. We have Telegram, Insta, Facebook, and we also have a dedicated WhatsApp number that you can WhatsApp if, let's say, you're too shy to ask any questions or you need further explanation on ETFs. Okay, so with that, thank you very much, FSM1, for inviting me to conduct this webinar, and I hope all of you here have learned something new today. All right, stay safe and take care. Good night.